If we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe it. All right. So again, a lot of you guys I'm seeing messaging, asking when could we see 12 to 13,000? I'm looking at. Interesting to me about the US dollar here is that you're coming into this Fed decision with technical support, right? So again, if we look at the dollar, it had this 3-bar surge, 1, 2, 3, then bullish consolidation, sideways consolidation after a 3-bar surge is definitely bullish. We then saw upside in the US dollar. Since the highs here and the banking crisis began, we've seen the dollar start to decline. Interestingly enough, look at where we find ourselves back into going into this Fed decision. So interestingly enough, does this announcement, does the Fed calm fears about a banking crisis? If the Fed calms, and think about this, right? If the Fed calms the banking fears down, does the dollar bounce? Does the Fed look like they're in control? Does the Fed say that the bleeding has been stemmed or stopped in the banking sector? Does that yield a bounce in the market? If the dollar bounces, does the banking system bounce? Do the bank stocks bounce? But then does technology sell off? Because usually when the dollar bounces, tech sells off. Now, what's fascinating about the last 2 weeks is that tech stocks have been a beneficiary of money flow that's been going out of the bank stocks, right? We've also seen Bitcoin do well. We've seen gold just ripping higher until yesterday's rally in the banking stocks when it really came back in. So we're really looking at, for me at least, when I look at the dollar chart today, number one, it's at a pivotal level. And basically what you're seeing here is the dollar's into technical support. So the probabilities favor a bounce in the dollar. If not, and you break lower, guess where the dollar's going? The dollar's going to head back to the recent lows all the way down here. There's really not a lot of technical support once you break this level. So again, probabilities favor a bounce in the dollar, which tells you the Fed is going to try to reestablish the fact that things are not that bad, even though they're going to take kind of a slight hike and pause mentality. They're going to calm fears, and that should give the dollar a bounce. Bitcoin is also at a major pivotal level. So you guys see, and by the way, for those of you that have followed Fed decisions or any big decision, jobs numbers, anything like that, what you'll notice is charts tend to be at major pivotal levels going into these announcements. All right, so when I look at Bitcoin, Bitcoin has continued to chop sideways over the last couple days, ever since it tested the 28,500 resistance. And by the way, why is that resistance? All right, because it is the lowest point. Check this out, guys. 28,500, which is the high that we just hit over the last couple days. It is the low pivot of the mid-bull cycle of 2021. So again, this is the symmetry of the charts. This is the power of the charts. So many people look at this chart, right? I mean, you look at this, what you're seeing on my screen right now, and you say, how do I make sense of this? This looks like a bunch of jumbled ups and downs and whips and lefts and rights. And ultimately, there is sense that can be made out of it. This is why chart reading works. Back to Bitcoin. So what we know is we're at a pivotal level going into this Fed announcement. If we see a pop on Bitcoin, there's a major level right up here. This is the big one at 30,000, even numbers. If you're a technician and you know charting, you know that even numbers matter in charts because they matter to our human psyche. Naturally, up here, guys, up here in our brains, we are drawn to even numbers. All right, we don't talk about 23,752.5. We talk about 50,000. We talk about 100,000. We talk about 30,000. We talk about a million. These even numbers on a statistical basis hold weight. So if we see a rally above 28.5, your next resistance is going to be a pierce of 30,000. For me, I'm going to be looking to inch in some more on the short side of Bitcoin. I'm in the camp that I play probabilities. Doesn't mean Bitcoin can't break 30,000. Let's keep that in mind. It just means that probabilities are the way I position myself. So I started a little bit of a short position at 28,450, right around 28.5, and I'll add to it at 30 and change, a pierce of 30. Now, if we establish ourselves above 30,000 and we stay above for like 7 days or so, and I'm looking for not just a pierce, a close above doesn't mean anything. I want to see a close above. That would be significant to me. The chart has to prove it to me before I believe it. All right. So again, a lot of you guys I'm seeing messaging, asking, when could we see 12 to 13,000? I'm looking at 2 to 3 months out if this 30,000 line gets rejected and we see price start coming back in. All right, so 2 to 3 months out, 12 to 13,000, and then likely 6 to 8 months out before we could see that 9,000, 10,000 target if it does. Basically, if we break that 15,000 low, then I actually do think 9,000 is the likely culprit here. Okay, all right. Here's your chart on gold. Basically, what we see on gold is that the consolidation is continuing. So basically from 2020, from the COVID dip and then the reversal to the upside where we made this high just north of $2,000 at 2075, you have been sideways chopping. All right. All of you, if you're new, maybe not. If you've been around me for a little while, you know this pattern formation. This is a classic bull consolidation pattern, right? So if we go out and we look at the chart here, gold's been in an uptrend up until that point, and then it's been in a side trend. You want to see something crazy? Go back to the 1970s. All right, look at this same exact pattern formation. All right, here it is. The 1970s, you had 2 to 3 years up like we had 2 to 3 years from 2017 to 2020. Then you had consolidation pullback, and then look at the run that gold experienced. To me, this is telling me the future. This chart, which is historic, is telling me the likely probability of what is going to come on gold. Now, do I think it's going to do a 9x? I don't think so, right? 9x seems a little outlandish to me on gold, which is what it did back in the 70s. But is it possible that we could get a 3x? Could we see $5,000 an ounce in 2 to 3 years on gold? Maybe 6,000? I do think so. I do think so, folks. And again, one of the things you have to note is look at the strength in gold. All right. Recently, the strength in gold is telling you institutions are buying. Basically, one of the things that I queued off of last year, even though gold did not have a stellar year, the dollar was up 20%. 20%. And gold was basically flat to negative on the year. That should not happen. All right. In a perfect world where things are equal, if the dollar's up 20%, gold should be down 20%-ish. All right. The fact that you saw gold holding steady, that was barely down on the year, that's telling you big money is buying in. Big money. And we know central banks are buying in. We know that the big money banks are buying in. So what that tells me is that gold continues to be one of my favorite assets for the remainder of this year. Do I think eventually Bitcoin will be my favorite? Yes. You guys know I'm a long-term huge bull on Bitcoin. I just don't trust the rally just yet because, again, probabilities are how I analyze everything that I do. Technical analysis tells us that when you have a double top, you're likely to pull back big. So here's your double top. Let's talk technicals here. I want to do some teaching. All right. So let's go into here. Let's see what we got here. Bear with me as I do this. All right. Here was your high pivot on gold. Here was your double top. Double tops, you get big pullbacks. All right. Now remember this because it will be useful in your future analysis. So here's your pullback off your first high. Here's your double top. Here's your pullback. What technical analysis tells us is that if we hit that level again, you'll only get a small retrace. You'll get a little bit of a retrace like this, much smaller, and then the breakout likely takes hold. So that's what I'm expecting. I think within the next month or so, we likely hit that triple top, and then we see a pullback, a very small pullback, a check back. Essentially, you're going to get sellers there. People are going to say, oh, it's at resistance again. Let me sell. Smart money's going to buy that pullback, and it's going to blast off to the races. Now, to me, so number one, the company reported a surprise profit. So that is good. All right. At least they're a little bit further away from going out of business. I congratulate GameStop on that. Having said that, this is just going to be a momentum trade to me. There's too many small traders and investors in it. If you want to know where resistance is going to be today, this is your spot. Look at this connector trend line right here. If we rally up to about $34 today, $34 to $35, notice the pseudo even number at 35. That's going to be your resistance. My guess is even if we pierce it, we pull back below 35 by end of day. So essentially what I'm giving you here is a potential resistance level on GameStop of where it potentially could be a short today. Please understand, I don't condone shorting stocks like this that are super kind of, shorted already, because you can get these mega moves like we saw. But if you wanted to, that to me would be your level to look on the short side. So Tesla's had a big move. I'm going to flip over to the daily chart. Today on an intraday basis, the level I'm watching for right here, there's a gap fill at 202.85 right here. Tesla right now is trading up on the day. It's up about $1.27, trading just below 199. 202.85 or 203, that is a technical level for a potential short today intraday. It wouldn't be something that I would swing trade necessarily off that level, but as a day trade short, that's going to be looking pretty special. Stock right now is trading, and bear with me, up $1.78, so it is positive on the day as we see the NASDAQ 100 essentially flat. It is into major resistance though. So again, it could go a little bit higher, but I'm in the camp that this is now a short. In fact, I think last week when we were talking about this stock, and if you go back to my stream, my game plan last week, I said to you guys, look for NVIDIA to push up into these levels. I had these exact trend lines on last week, and look at where it is. It put in a topping tail. The topping tail has not been negated yet. But again, anything in this range to me is more of a... This is a very pricey stock. A lot of hype around AI. I don't buy hype. You guys know me. I buy facts. I buy logic. I buy technicals. All right. Human psychology is what I game off of. These are all things that are in my repertoire. And again, hype is not one of them. Hype gets you in trouble. So anyways, watch for NVIDIA. I am a bear on NVIDIA in the near term for a pullback. Short-term pullback should take us back to at least 228. Maybe as low as 206 if the market starts selling in a major way. Again, Coinbase here, you can see had a nice move up. The only level I'm looking for on Coinbase where I would potentially short this today or in the next few days, 100 even number, this pivot area right up here. This is a nice little area. It's just too risky. If we're going to see a pop, well, and I should say, if potentially we're going to see a bounce on Bitcoin, let's say to 30,000, like let's say it pops to 30, you got to assume, and again, this is a risk. It may not happen, but I don't want to get caught with my essentially pants down in this scenario, right? So basically, if we go to this level here, which we're at already, 86 is resistance. But if Bitcoin can push to 30, you got to assume this gets another leg up. Shorts covering, maybe it gets to about 100. $100 gets me short on Coinbase.